Hello everyone and welcome to my session today. And I also welcome you to Unacademy, India's largest online learning platform. I welcome you to the Crack CA Exams with Us vertical, newly started by Unacademy, which caters to the foundation, intermediate and final students of the Chartered Accountancy course, which this course helps the various students of the CA Foundation, CA Intermediate and the CA final course in their preparation towards this tough and challenging exam of the Chartered Accountancy course. All of you are welcome and come, let's crack CA exams. A little about the educator today. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, an associate member of the Institute of Company Secretaries of India. I am also a law graduate from Karnataka State Law University and currently a practicing chartered accountant. I am also a visiting faculty in a number of institutes for CA subjects and an educator for CA students both offline and online. Prior to starting my own practice, I worked with SR Bartleby and Associates, that is the Indian member firm of Ernst & Young Global, also known as EY, in the Audit and Assurance Department, and Ernst & Young India in the Mergers and Acquisition Department. I also worked with the Manipal Group and was corporate controller of their German subsidiary located in Frankfurt, Germany. After I got back from there, that's when I decided to start my own. So I welcome you all to my session today. I hope you find it useful and beneficial to yourself. Now, like I told you, Unacademy is the largest online learning platform, and Unacademy provides to you a plus model or a plus platform, which is a subscription-based platform. Now, once you subscribe to the plus platform of Unacademy, what do you get? Firstly, you get the daily live classes in which you can chat with your educator, engage in discussions, ask your doubts and answer polls. All this while the class is going on. Yes, all this can be done on real-time basis when the class is going on. You do not need to fix up another appointment. You do not need to wait for a couple of days. You do not need to wait for the class to get over. You can ask your doubts then and there, and those will be cleared. You can also discuss on the relevant subjects and topics with the educator. Not only this, you also get to choose your educator, whoever you find useful, whoever style of teaching you find useful. You can select the educator, select the timings, engage in discussions and ask your doubts. All this while the class is going on. Nextly, we have live classes and quizzes. The Plus platform of Unacademy conducts various live quizzes and tests which help you evaluate your preparation with the regular mock tests and quizzes, and also get detailed analysis of your performance. Now, what happens here? The Plus platform of Unacademy conducts various mock tests and quizzes which help you evaluate your performance. Now, how does that help you? Obviously, if you evaluate your performance, you get to know periodically what are your strengths, what are your weaknesses, which are the areas you need to spend more time, and which are the areas where you can spend relatively lesser time. So once you identify your strong areas, the time that you save there can be compensated by using it on your weak areas, and in turn bringing your weak area also up as your strong area. The courses provided by the Plus platform of Unacademy are structured courses. They are structured courses in the sense that all the courses are in line with your exam syllabus to help you best prepare for it. So all the courses are prepared keeping in mind the syllabus of your examination, so that once you finish a particular course under the Plus platform, you can be reasonably certain that yes, you have completed the entire syllabus for the examination. It tries its level best to the maximum extent possible, that there is no topic, no important topic or chapter left which is not in line with your syllabus. And lastly, and most importantly, you get your one subscription to the Plus platform of Unacademy gets you access to all the live and recorded courses to watch from the comfort of any of your devices. So what does it do? Once you subscribe to the Plus platform of Unacademy, the one subscription gives you access to all the live classes like how it is going on now, and also the recorded classes of Unacademy which has happened in the past in the archive, so that you can select those and make the most of it. Not only this, you can view it on your desktop, your laptop, your tablet or your mobile, and you can carry it in your pockets when you are in between work, or you are running for meetings, or you're traveling, commuting, and you have nothing else to do. You can use that time to prepare for your examination. So that's how the Unacademy Plus program helps you. All right, so I hope all of you make the most of it and are benefited thoroughly. And I encourage all of you to become a part of the Plus program on Unacademy as soon as possible. For those of you who have downloaded and are using the Unacademy Learning app, I thank you so much, and I request you to continue your support in the future as well. And for those of you who have not yet downloaded the Unacademy Learning app, I request you to download the Unacademy Learning app and register on it. The registration process is quite simple. You need to enter your mobile number, and then you get an OTP on your mobile, and using that OTP you can register on Unacademy, on the Unacademy Learning app. Now what happens when you start using this app? In continuation to my previous slide, you can use this app whenever you want. You can carry the entire world of courses, resources and content that Unacademy has to provide you in your pocket, and access it and learn from it at any time you find time. You do not need to make a schedule. You do not need to sit on your table, study table or dining table while you're returning home from work, or you're returning from your classes, or you're returning from anywhere. If you're stuck in traffic, which is quite a problem these days, then you can access the Unacademy Learning app and revise and go through all your sessions. Listen to your favorite educator, listen to your favorite topic. And not only this, at any time of the day, 24/7, this is available to you, so you can access it whenever you want. So again, I request the people who have not yet downloaded and using the Unacademy Learning app, I request you to download it and use it as soon as possible. And I hope to see you there very soon. Like I said, the Unacademy Plus platform is a subscription-based paid model. I am part of the CA Foundation and Intermediate course. So the CA Foundation and Intermediate subscription plan of the Unacademy Plus program are as follows. The CA Foundation and Intermediate subscription plan gives you subscription for 1 month, 3 months, 6 months, 12 months and 24 months. The cost of the 1 month plan is 3,500. The 3 month plan costs you 8,750. The 6 month plan costs you rupees 14,000. Excuse me. The 12 month plan costs you rupees 17,500. The 24 month plan costs you rupees 21,000. Now, while you decide to make the subscription of your choice, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the listed price of your subscription. I repeat, Prathik, to get a discount of 10% on the listed price of the subscription. So the after discount price of the various packages will be: the 1 month package will cost you rupees 3,150. 3 month package will cost you rupees 7,875. The 6 month package will cost you rupees 12,600. The 12 month package will cost you rupees 15,750. And the 24 month package will cost you rupees 18,900. This is after you use the code Prathik, Prathik, to get a discount of 10% on your subscription, on your list price. Now, while you're free to choose whichever subscription package you want, my personal recommendation to you for the CA Foundation and Intermediate subscription will be to go for the 12 month or 24 months package for 2 reasons. Firstly, it is cost effective. If you see the difference between the 3 months, 6 months and 12 months package, it's not much, but you get a double or triple the duration. Okay, and secondly, while you're preparing for the CA Foundation and Intermediate subscription, it normally takes you about a year or so for you to prepare, and appear for the foundation as well as the intermediate subscription. So when you're getting both of them in one package, I will suggest you to go for the 12-month package or the 24-month package to make the most of it. So having said this, you're still free to choose or make the package that you want, but my personal recommendation to you will be the 12 months or the 24 months package. And while choosing the package, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the list price. So I expect and encourage and I request all of you to be part of the CA Foundation and Intermediate subscription plan of the Plus platform of Unacademy as soon as possible, and make the most of it and take advantage of all the expert and world-class educators present on the platform. So I hope to see you there soon. Now, for those of you who have not followed my profile yet, I request you to go to the Unacademy app on your mobile. Go to my profile, Prathik Gupta, Prathik Gupta, and click on the follow button so that you get real-time updates about the topics and the timings of my sessions, so that you are never late to miss my sessions, because I would love to have you in my sessions each and every time I conduct a session. So please do not forget to go to the Unacademy app, look for profile of Prathik Gupta and click on the follow button. Now, Today's topic, what I'm going to talk about is Prospectus and Allotment of Securities Part 2. Now, why do I call it Part 2? Simply because I call it Part 2 because Part 1 has already been addressed by me and taken by me successfully about a few days ago. If you go on to your YouTube channel, you will find the Prospectus and Allotment of Securities Part 1 there. So the people who have missed it, I request you to go to the archives on YouTube and just type in Prathik Gupta and you will find all my sessions, and I request you to view them and take advantage of them and benefit from them. So basically, before we start off about the chapter, what do you mean by prospectus and allotment of securities? Now, prospectus and allotment of securities, I have taken sessions on incorporation of companies and matters thereof. In that session is also there on YouTube. So I have taken various sessions. I have taken sessions on the Companies Act. I have taken sessions on incorporation of companies, prospectus and allotment of securities, raising money through deposits by companies, accounts of companies, and various things. Then I've taken the Indian Contracts Act, the Companies Act 2013, the Indian Partnership Act, the Limited Liability Partnership Act, and many other sessions on YouTube. So so I request all of you to just go onto the YouTube thing and type in Prathik Gupta. You will get all the sessions that I have taken. I request you and I urge you to please go through those sessions, view those sessions, and ask me in case you have any doubts. So similarly, while I was taking the session on incorporation of companies under the Companies Act 2013, I spoke about the various kind of companies, that is your private limited company, public limited company, OPC, one-person company, small company, government company, holding company, subsidiary company, etc. So in that, the one major thing we spoke about was a private limited and a public limited. Just to recap, a private limited company is a company which is run by a small group of individuals, and it has three basic restrictions in its articles of association. The first restriction is on the number of members. The second restriction, important restriction, is it cannot on the transferability of shares. The members in a private limited company cannot transfer shares out to whoever they want. They cannot transfer the shares outside the company without first offering it to the existing shareholders first. And only if the existing shareholders say no, then the company can offer those securities to people outside the company. And the third important restriction on them was they cannot invite public, or they cannot issue advertisements to public to subscribe for the shares of the company. So these three restrictions, when it is removed from the articles of association of a company, the company becomes a public limited company from a private limited company. Okay, so these three restrictions, if you notice, make a company a private limited company, and these three restrictions are present in the articles of association of the company. So once these are removed from the articles of association, then it becomes a public limited company. All right, so the minimum number of members in a private limited company are 2, and the minimum number of members in a public limited company are 7. So any 7 or more members can come together and start a public limited company. So prospectus means an advertisement which a public limited company issues to the public when it wants to raise capital from the public. Now, how can a company raise capital? There are various methods in which a company can raise capital. It can raise capital from existing shareholders. It can raise capital through preference shares. It can raise capital through debentures. It can raise capital through borrowing loans from banks. It can raise capital by inviting deposits from the public. I have taken a session on acceptance of deposits by companies under Companies Act 2013 also. That is in the archives in your YouTube. I request you all to go through it and let me know in case you have any doubts. So these are what we're going to discuss in this topic is the various methods in which a company can raise capital, and one of the methods in which the company can raise, public limited company can raise capital, is through issue of prospectus, that is inviting public to subscribe to the share capital of the company. And once the public does that, in turn they need to allot the shares or securities to the company. Why do we call it securities? Please remember, equity shares and preference shares are shares, but there are debentures, deposits, and other stock which a company can issue. Those are not shares, those are securities. So that's why it is called securities, and securities includes equity shares, preference shares, debentures, deposits, and other stock which the company issues in order to raise capital. All right, I hope it's clear so far, and in case you have any doubts, please ask me. So what now, we'll do a quick recap in what we did in part 1, and then we will continue in what we have to do in today's session. So Quickly I will go through this. Please remember, whatever I've done in part 1 is already there on YouTube, and I request you to go through it. But right now, for the benefit of the viewers, I'm recapping it, so I will be a little fast on this. And once we come to today's content, then it will go in detail again. One of the advantages of floating a company is raising capital. Capital can be raised from public at large or from defined group of inner circle. The former is known as public offer, and the latter is known as private placement. Capital acquisition is inflow of funds, and the issuer and needs advertisement which can be in accordance with the relevant legal provisions so that any investor is not defrauded or fooled. On successful closure of the application process, securities are allotted to investors, which can be then listed on an appropriate segment of the recognized stock exchange. So like this slide says, there are two ways in which you can raise capital. One is from the public at large. That is, a public limited company can raise capital from the public at large, or it can raise from a pre-known set of people. That means you already know who are the people who are interested to invest in your company, and you raise capital from them. So in these two ways. So what I've discussed in part 1 is the public offer, how to raise capital from the public at large. And in today's session, we're going to talk about private placement. That means when we've identified a specific group, how do we raise capital from them? All right, so let's quickly go. Section 223(1), a public company may issue securities to public through prospectus, hereunder referred to as public offer, or through private placement by complying with the provisions of part 2 of this chapter, what we will do in today's session, and through a rights issue or bonus issue. Now, rights issue or bonus issue is issuing capital from existing shareholders. That means who are already shareholders of your company, you give them a rights issue. That means if a person holds 10 shares, and if your company gives a right that for every one share held, the shareholder can apply for one more share. That means a person who holds 10 shares can apply for 10 more shares in the company and pay for it less than the market value. So it obviously raises capital through that. As per section 23(2), a private company may issue securities by way of rights issue or bonus issue through private placement. Like I told you, the restriction in the articles of association of a private limited company is restriction on transferability of shares and on invitation to public to subscribe for the shares. So a private limited company can raise capital by way of rights issue or bonus issue or private placement, but it cannot raise capital through public offer. All right. Prospectus. Now, what do we mean by prospectus? A prospectus, in simple terms, means an advertisement issued to the public, which gives you information about all the particulars of that offer that is being made to them and the shares that are being offered to them for subscription. Prospectus means any document described or issued as a prospectus and includes a red herring prospectus or shelf prospectus or any notice, circular, advertisement or other document inviting offers from the public for the subscription or purchase of any securities of a body corporate. Matters to be stated. Now, like the first paragraph said, a prospectus is nothing else but an advertisement or a notice or circular given to the public that a company wants to raise capital through public offer, and these are the particulars. I request you all again to go through my part 1 of this topic to know more about the prospectus and everything in detail. Today I will be rushing through a little bit whatever we've done in part 1. Matters to be stated in prospectus: the date and signed and shall state such information as set out on financial reports on financial information as may be specified by SEBI. Please remember, every listed company is administered by SEBI, that is Securities and Exchange Board of India, in consultation with central government. So that body specifies what should be the content of the prospectus. All right. Prospectus shall make a declaration about the compliance of the provisions of this act and a statement to that effect that nothing in the prospectus is contrary to the provisions of this act and securities listing. So the prospectus also will give a declaration that all compliances as per the Companies Act, the Securities Contract Regulation Act, and Securities and Exchange Board of India Act and rules made thereunder are made. Prospectus not to be issued after registration and compliance with other formalities. No prospectus shall be issued by or on behalf of a company or in relation to an intended company unless on or before its publication there have been delivered to the registrar for registration a copy thereof signed by every person who is named as a director in the company or proposed director of the company or his duly authorized attorney. That means before the registrar, before the prospectus is issued, a copy should be registered with the registrar and signed by every person who is mentioned as a director in the company. Mention compliances of every formalities. the prospectus should also state clearly that all the compliances with the respective laws have been done, and then a copy of it also should be registered with the registrar. Prospectus shall be not valid if it's issued more than 90 days after the date on which a copy has been delivered to the registrar. So that means when from within 90 days of the registration of the prospectus with the registrar of companies, the prospectus should be issued. If it is issued after 90 days, it is invalid. And in case any of these provisions are contravened, then there is a respective punishment as per Companies Act 2013. Now, what do we mean by shelf prospectus, red herring prospectus, and abridged prospectus? Let's quickly go through that. Shelf prospectus. The expression shelf prospectus means a prospectus in respect of which the securities or class of securities included therein are issued for a subscription in more issues over a certain period of time without the issue of further securities. So simply meaning a shelf prospectus is like a shelf, one below the other or in a series. That means if you're issuing the same class of securities in one or more issues, then for each issue you do not need to issue a separate prospectus, get it registered with the registrar, but you need to register just one shelf prospectus, and under that shelf prospectus all the series of those same classes of shares being issued or offered to the public can be done without issuing a prospectus, because please remember, the issue of prospectus and all that can be a very costly and time consuming affair. So doing it again and again is not a simple and easy procedure. So when you know that you're going to have a series of public offers, all those series of public offers can be included in one shelf prospectus, and that shelf prospectus can be registered with the registrar and then issued to the public. Again, filing of shelf prospectus with the registrar. First, it needs to be registered with the registrar of companies, and only then it can be issued to the public. Then once it is done, then under that shelf prospectus, the subsequent and the second and subsequent issues need not be done after the issue of prospectus, because one shelf prospectus has been issued. All right. Filing of information memorandum with shelf prospectus. Then now what happened? Now the first issue took place. For that you gave a shelf prospectus. Now the second issue under that happened after 6 months. So then you need to also file a document known as an information memorandum, which gives clearly the changes that have happened between the first issue and the second issue, that is between that 6 months, in terms of the company's financial status, important transactions that have happened, important charges that have been created, in the sense assets that have been pledged. All those changes you need to, within that 6 months, you need to issue a document known as an information memorandum, which will form part of the shelf prospectus. Memorandum together with the shelf prospectus shall deem to be the prospectus. What do you mean by red herring prospectus? The expression red herring prospectus means a prospectus which does not include complete particulars of the quantum or price of the securities thereon. So it is also an abridged or a short form of a prospectus which does not include the number of securities as well as the price of securities included thereon. A company can issue a red herring prospectus prior to the issue of prospectus. A company proposing to make an offer of securities may issue a red herring prospectus prior to the issue of prospectus. That is a prospectus with all the details but no details of the price or the quantity, just to know the demand that the company is going to have for its offer of securities. Then again, like every prospectus, that red herring prospectus needs to be registered with the registrar before it is issued to the public, and at least 3 days prior to the opening of the subscription list and the offer. Same obligation. A red herring prospectus shall carry the same obligations as are applicable to prospectus, and any variation between the red herring prospectus and a prospectus shall be highlighted as variations in the prospectus. Abridged prospectus means a memorandum containing salient features of a prospectus and may be specified by the Securities and Exchange Board. Now, abridged prospectus is again a short form or an extract of the prospectus, and it will contain that information which the SEBI will decide from time and time and notify to the companies. Now you issued a prospectus, a red herring prospectus, a shelf prospectus, or a abridged prospectus. You issued shares to the public gave you the application money, and they subscribed to the offer. Now please remember, no offer is complete unless an allotment of securities is made by the company, and only after an allotment is made by the company do the person who's subscribed to the shares becomes the shareholder of the company. So an allotment is the end result and last procedure after which a person becomes a shareholder of a company. So if there is no allotment, there is no shareholder. Okay. Allotments means the appropriation out of the previously unappropriated capital of a company of a certain number of shares to a person. Till such allotment, the shares do not exist. It is on allotment that the shares come into existence. No allotment of any securities of a company offered to the public for subscription shall be made unless the amount stated in the prospectus as the minimum amount has been subscribed and the sums payable on application for the amount so stated have been paid or received by the company by check or instrument. Now please remember, whenever the company makes a public offer, there is a particular minimum subscription that the company needs to receive. Let's say, for example, the company offered 10,000 shares for the public to subscribe. Now, out of 10,000 shares, if the shares, only 2,000 shares have been applied for by the company, the offer is said to have failed, and whatever money they receive for those 2,000 shares, the company will have to return it, because the minimum subscription is normally 90%. So unless 9,000 shares are applied for by the public, they cannot be a valid or a successful public offer. So if a minimum subscription amount is not received from the public within the specified time, then the company has to return the money to whoever has subscribed to the company. Okay, and no allotment can be made. The amount payable on application on every security shall not be less than 5% of the nominal amount of the security or such other percentage as the case may be. So if the share's nominal value is 10 rupees, minimum amount that you need to receive on application is 50 paise. That is 5% of the nominal amount, or any such higher percentage as may be specified by the Securities and Exchange Board of India. All right. If the stated minimum amount has not been subscribed and the sum payable on application is not received within a period of 30 days from the issue of prospectus or such other period as may be specified by SEBI, the amount received shall be returned with such period and manners as may be prescribed. Whenever a company having a share capital makes any allotment of securities, it shall file with the registrar a return of allotment in such manner as may be prescribed. So whenever a company allots any securities to anyone, it needs to file that information with the registrar of companies, and if the minimum subscription is not received, a company cannot allot securities. Okay. Misstatements. Now obviously prospectus is a very important document because a lot of people are relying on it and investing their hard-earned money into the company. It contains the various particulars of the issue, the share price, the quantity, the directors, the experts, the auditors, financial information, everything. So all this information has to be true. In case there is any misstatement in this information, then the person who has invested in the company would have been actually cheated, right? Because he's relied on that information and then he has input his hard-earned money into the company. So the information contained in the prospectus has to be true and accurate and not false and inaccurate. Okay, so misstatements is the act of stating something that is false or not accurate. It could either be by commission or by omission or by both. So there is a criminal liability for misstatements in prospectus. What is the criminal liability? Please remember, I have also done this in my part 1 earlier. So you need to go through part 1 to know more in detail and hear more explanations on this. So here, the prospectus issued and circulated or distributed under this chapter includes any statement which is untrue, misleading in form or context in which it is included, or where any inclusion or omission or any matter is likely to mislead. Every person who authorizes this thing shall be liable under section 447. And there's also civil liability for misstatements in prospectus. What are those? According to section 35(1), where a person has subscribed for securities of a company acting on a statement included or the inclusion or omission of any matter in accordance which is misleading and has sustained any loss or damage as a consequence thereof, the company and every person who is a director of the company at the time of issue of the prospectus has authorized himself to be named in the prospectus as a director, or is a promoter of the company, or has authorized to issue a prospectus is an expert. All these people will be criminally liable or civilly liable also to the person who has relied on that such a prospectus which is containing misstatement and false information, and they will be they will have a civil liability towards that person as well. Okay, now let's take example like we discussed last time. A company issued a prospectus. All the statements contained therein were literally true. It also stated that the company had paid dividends for a number of years but did not disclose the fact that the dividends were not paid out of trading profits but out of capital profits. An allottee of shares wants to avoid the contract on the ground that prospectus falls in material particulars. Let's look at the answer. The non-disclosure of the fact that dividends were paid out of capital profits is a concealment of material fact, as a company is normally required to distribute dividends only out from trading or revenue profits, and under exceptional circumstances can do so out of capital profits. Hence, the material misstatement has been made. Hence, in the given case, the allottee can avoid the contract of allotment of shares. Please also go through my YouTube session on payment of dividend, declaration and payment of dividend, which is taken there. I request you all to go through it to gain more insight about what are the procedures under the Companies Act 2013 for declaration and payment of dividend. So in this case, because the company has concealed the fact that the dividend was paid out of capital profits, it is a avoidable contract. Next example. An allottee of shares in a company brought action against a director in respect of false statements in the prospectus. The director contended that the statements were prepared by promoters and he has relied on them, and so director is not liable. Answer: the director shall be held liable for false statements in the prospectus under section 34 and 35 of the Companies Act 2013. Section 34 imposes a criminal punishment on every person who authorizes the issue of such prospectus, and section 35 more particularly includes the director of the company in the imposition of liability for such misstatements. Therefore, in the present case, the director cannot hide behind the excuse that he had relied on the promoters for making correct statements, because he has given his express consent to be shown as a director in the company. So in this case, he will be liable. The last topic for prospectus: punishment for fraudulently inducing persons to invest money. So if in case a person undertakes fraudulent means, gives wrong information in the prospectus, gives false information, lies, and then he takes money from people through a prospectus, he shall be personally liable as well as criminally liable to that person. It could also mean obtaining credit facilities from banks. Punishment for fraud. Meaning of fraud: fraud in relation to affairs of a company or any body corporate includes any act, omission, concealment of fact, or any abuse of position committed by a person or any other person with the convenience of others. That means if any advantage is obtained over another person through fraud, then that person will have a civil liability as well as a criminal liability from whom the benefit has such been obtained. Okay? Please take about 30 seconds, go through this, and then we continue. Okay, now let's come to today's session. Now, so far we spoke about prospectus, that is the way of issuing capital through public offer. That means we need to issue a prospectus, a red herring prospectus, an abridged prospectus, a shelf prospectus, and then give all the particulars and everything, and then raise money from the public. And then once the public gives the money, there is supposed to be a minimum subscription of 90% that is to be received, or 90% or whatever percentage that SEBI gives from time to time. And in case the minimum subscription is not received, in that case the company has to return the entire money to the subscribing public. Okay, so clear. And then if they've received the minimum subscription, then the company has to go ahead and allot the shares, and only after allotment do those applicants become shareholders. And then a return of the allotment has to be filed with the registrar of companies. Now let's look at not raising capital, not from the public, but from, you've identified an institutional investor, or you've identified a particular organization that is ready to invest in your company because they like your idea, and they say, okay, we will raise contribute capital to your company, so please come to us. In this case, let's see what a private placement is. Like the name says, private placement means the capital is being raised privately. That means you've already identified. Whereas a public offer, you've not identified the person from whom you're going to get the capital, but it is offered to the public generally, and anyone who's interested can apply. But in case of private placement, you have identified, spoken to the person, and the person is interested to invest in your company. So let's talk about that. A private placement is a way of raising capital that involves the sale of securities to a relatively small number of select investors. A private placement is different from a public issue in which securities are available for sale in the open market to any type of investor. So like I said, it is not open to anyone to invest. You have identified the person who's ready to invest and he's already told you, yes, I will invest. So you're offering the shares to him. Now, what is the procedure for offer or invitation for subscription of securities on private placement? Please remember, a private limited company can also raise capital through private placement, as well as a public limited company can also raise capital through private placement. But only a public limited company can raise capital through public offer and not a private limited company. So let's look at the provisions for subscription of securities on private placement. Point 1, the company may, subject to the provision of this section, make a private placement of securities. Okay, so once the company is making a private placement of securities, it has to follow the rules of Companies Act 2013, the Securities Regulation Contracts Regulation Act 1976, as well as the SEBI Act 1992, that is the Securities and Exchange Board of India Act 1992. A private placement shall be made only to a select group of persons who have been identified by the board, hereinafter known as the identified persons, whose number shall not exceed 50 or such a higher number as may be prescribed in a financial year, subject to terms and conditions as may be prescribed. So the board of directors has already identified a group of people from whom it intends to raise capital. Okay, now this group of persons shall not exceed 50 or any such number provided from time to time by SEBI or Companies Act in a financial year, subject to such terms and conditions. So it has to be maximum of 50 or any number that is provided instead of 50 or specified by the Companies Act. Okay. The company making a private placement shall issue private placement offer and application in such form and manner as may be prescribed to identified persons, whose names and addresses are recorded by the company in such manner as may be prescribed, provided that a private placement of offer and application shall not carry any right of renunciation. So first and foremost, a company making a private placement shall issue a private placement offer. It shall issue an offer like any contract. There has to be an offer and acceptance, right? We've read that. If people who missed it, please go to the Indian Contracts Act 1872, and I've spoken about the essentials of a valid contract. One of the essentials of a valid contract are a valid offer and acceptance. So a private placement offer also has to be made to that identified individual or group of individuals. An application in such form as may be prescribed to identified persons, whose name and addresses are recorded by the company in such manner as may be prescribed. Please remember, there is a form called PAS3 that needs to be submitted to the Registrar of Companies that gives particulars of the person to whom the private placement is being made. That is the name of the person, the organization name, the address, the number of shares, the value of the shares, all that has to be given in a form called PAS3 and has to be submitted to the Registrar of Companies. So obviously then we have to give the names and addresses are recorded by the company in such manner as may be prescribed, provided that the private placement offer and application shall not carry any right of renunciation, which simply means this is not like a public offer that you offer it to the public and the public has a right to say no. Whereas a private placement, you have already discussed and identified the person to whom the offer is being made, and the offer will not carry any right of renunciation. That means they cannot say no, because already the things have been discussed and everything, and now you're making a private placement, so they cannot refuse the issue. All right. Then every identified person willing to subscribe to the private placement issue shall apply in the private placement an application issued to such person along with the subscription money paid either by check or demand draft or other banking channel. So you have made an issue or you have made an offer to the private placement identified parties, and you've also told them in the way in which the application and the acceptance should come. So then they give the application along with the subscription money. So the subscription money has to come either by check or by demand draft or by any banking channel, that is a NEFT, RTGS, but it cannot be paid by cash. So in case of a private placement, you cannot pay the application money or subscription money by cash, but it has to be by check, demand draft or any other banking channel. Okay. Provided that a company shall not utilize monies raised through private placement unless allotment is made and the return of allotment is filed with the registrar. This feature we also saw it under public offer, that the money received by a company on public offer also cannot be utilized by them until the shares are allotted to the applicant and the return of allotment is filed with the registrar of companies. Once that is done, the company can utilize the money. So the similar concept applies in private placement as well, that once the company receives the money from the private placement party, they cannot use the money until the allotment is made by passing a special resolution, and that special resolution is filed with the registrar as a return of allotment. Once that is done, then the company can utilize that money which they have received through private placement. No fresh offer of invitation or invitation under this section shall be made unless the allotments with respect to any offer or invitation made earlier have been completed, or that offer or invitation has been withdrawn or abandoned by the company. So if there is already a private placement offer going on, that means you've identified a private placement party and there are negotiations or the offer is going on, they are yet to accept it, yet to come back to you. When that whole procedure is still going on, you cannot make a second offer, a private placement offer, to any other person or party until the first offer is either abandoned or it is accepted and you complete the allotment formalities. So the second or subsequent private placement can be made only after the first private placement offer is completed or it is completely abandoned. That means it is completely shelved. Then you can do that. Provided then, subject to the maximum number of identified persons under subsection 2, a company may at any time make more than one issue of securities to such class of identified persons as may be prescribed. So subject to the maximum number is 50. So as long as the private placement people are less than 50, you can issue a different class of securities to them. Like for example, you can issue equity shares on private placement to ABC company, and you can issue debentures to a company called DEF. Different class of securities are being issued, so nothing stops you from doing that. But the same class of securities cannot be issued unless the previous offer has been accepted or withdrawn by the company. A company making an offer or invitation under this section shall allot its securities within 60 days from the receipt of application money for such securities. And if the company is not able to allot the securities within that period, it shall repay the application money to the subscribers within 15 days from the expiry of 60 days. And if the company fails to repay the application money within the aforesaid period, it shall be liable to pay that money with interest at the rate of 12% per annum from the expiry of 60th day. Okay, so you've made a private placement offer, the offer was accepted, everything was done, you received the money as well. Now the company, from the day it receives the application money and the subscription money, the company gets 60 days to allot the securities to the person to whom shares have been issued on private placement. If the company does not allot the shares within 60 days from the date of receipt of the money, the application money has to be returned to the subscribers within 15 days of the expiry of 60 days. And if the company fails to repay the money within 50 days from the expiry of 60 days since the receipt of money, the company will be liable to pay interest at the rate of 12% per annum for the expiry of the 60th day. That means from the 61st day onwards, it will have to pay an interest of 12% per annum. Okay? Yeah. No company issuing securities under this section shall release any public advertisements or utilize any media, marketing or distribution channels or agents to inform the public at large about the issue. Needless to say, when a company is making a public offer, at that time it needs to issue a prospectus, red herring prospectus, abridged prospectus, shelf prospectus, or an advertisement or notice telling the people that, okay, I'm issuing this security, please come and subscribe. But in case of private placement, like the name says, it is being offered to an identified group of people. So there is no need for the company to advertise it or popularize it through issuing advertisements or market or distribution channel. It is a very private transaction because you already know who is the person who is buying your shares. A company making any allotment of securities under this section shall file with the registrar a return of allotment within 15 days from the date of the allotment in such manner as may be prescribed, including a complete list of all allottees, their names, addresses, number of securities allotted, and other relevant information as may be prescribed. So now you've made a private placement offer, you've got the money, you've got within 60 days you've allotted the shares also of getting the money, so there is no question of returning the money. Now you have allotted the securities. Now within 15 days of allotment of the securities, you need to file that return of allotment with the registrar of companies. Okay, and then also you need to file a form PS3, I think, which contains particulars of all the people who have been allotted shares on private placement basis. The details that you need to give is a complete list of allottees with their full names, addresses, number of securities allotted, and such other relevant information as may be prescribed. Okay, if the company defaults in filing the return of allotment within the prescribed period, then the company, its promoters and directors shall be liable to a penalty for each default of rupees 1,000 rupees for each day during which such default continues, but not exceeding rupees 25 lakhs. So that means within 15 days after which the shares are allotted to the person on a private placement basis, if the return of allotment is not filed with the registrar of companies, then every person who's a director at that point will be liable for 1,000 rupees per day penalty, but which shall not exceed rupees 25 lakh rupees. Subject to subsection 11, if a company makes an offer or accepts money in contravention of this section, the company, its promoters and directors shall be liable for a penalty which may extend to an amount raised through private placement or 2 crore rupees, whichever is lower, and the company shall also refund all the monies with interest as specified in subsection 6 to the subscribers within a period of 30 days. So whatever procedure we saw so far, that the offer is made, application is made by the private placement party, they put the money, within 60 days of receipt of money, if the shares are not allotted, then they need to be returned to them within the expiry of 15 days from the end of 60 days. And then if the shares are allotted within 15 days, if a return of allotment is not filed with the registrar of companies and other procedures given by the Companies Act and SEBI, if these procedures are if any company accepts money in contravention of these provisions, in that case, every promoter or director of such a company which receives money through private placement in contravention of this section shall be liable to a penalty which may extend to rupees 2 crores or the amount that they have raised to private placement, whichever is lower. And the company shall also refund all the monies with interest within a period of 30 days from imposing the penalty. Please take about 30 seconds, go to this slide, then we proceed. Okay. Notwithstanding anything contained in subsection 9 and subsection 10, any private placement issue not made in compliance with the provision of subsection 2 shall deem to be a public offer, and the provisions of this Act and Securities Contract Regulation Act 1956 and Securities Exchange Board shall be applicable. So if the company does not fulfill all the above regulations or any of the above regulations, then such issue will not be termed as an issue on private placement. It shall be issued as a public offer, and all the requirements like prospectus, red herring prospectus, shelf prospectus, all those requirements, and also the provisions of the Companies Act 2013, the Securities Contract Regulation Act 1956, and the Securities and Exchange Board of India Act 1992 shall be applicable. So then the company will have to comply with all that, and in case the company does not comply with that, again there will be heavy penalties. According to Rule 14 of Companies Prospectus and Allotment of Securities Rules for 2014, for the purpose of subsection 2 and subsection 3 of 42, a company shall not make an offer or invitation to subscribe to securities through private placement unless the proposal has been previously approved by the shareholders of the company by a special resolution in each of the offers or invitations. Okay, so then, like I told you earlier, in the private placement you cannot issue a prospectus or an advertisement for the public to subscribe to the shares, provided that an explanatory statement annexed to. And also now the company, one more thing is that the company cannot issue or raise capital to private placement unless the resolution has been passed by a special resolution by its members, shareholders of the company. So once the agenda for the EGM or the AGM where this proposal is being put up is sent to the shareholders. Along with that, an explanatory statement is annexed to the notice for shareholders' approval. The following disclosure shall be made in the notice. That is, particulars of the offer, including the date of passing the board resolution. Obviously, the board of directors need to recommend it to the shareholders, so they should have passed it in their board meeting. The kinds of securities offered and the price at which the security is being offered. What is the security? Whether it's equity share, preference shares, debentures, or what is being offered. Basis or justification of the price, including premium, and which offer or invitation is being made. That means the valuation, the basis of value of the price arrived at of the share. The name and address of the valuer who performed the valuation. Recently, the Companies Act has changed that a valuation can be performed only by a registered valuer, and he is authorized to do the valuation of securities. So his certificate, his name, number, address also has to be mentioned in the notice. Amount which the company intends to raise by such securities. So what is the amount that the company is intending to raise through private placement also has to be given by the company. Material terms of raising such securities, proposed time, schedule, purposes or objects or offer, contribution being made by the promoters or directors either as part of the offer or separately in furtherance of objects, principal, terms of assets charged as securities. For the purpose of subsection 2 of section 42, an offer or invitation to subscribe securities under private placement shall not be made to persons more than 200 in an aggregate in a financial year. So like we saw the number as 50, but like we said that the number 50 can be changed by the Act time to time. So the Act has changed the thing to 200 people in an aggregate in a financial year. A return of allotment of securities under section 42 shall be filed with the registrar within 15 days of allotment. We have already discussed this. Within 15 days of the securities being allotted, a return of allotment has to be filed with the registrar of companies. Now, before we conclude this session, let's look at an example. Okay, ABC Limited wants to raise funds for its upcoming project. ABC Limited, so that means it's a public limited company. It has issued private placement offer letters to 55 persons in their individual name to issue its equity shares. That means it has identified 55 people to whom it is giving an offer for private placement. Out of these, 4 are qualified institutional buyers. That means out of these 55 individual names, 4 of them are institutional buyers. That means they have an organization that invests into other companies. Before allotment under this offer letter, the company issued another private placement offer letter to another 155 persons in their individual name for issue of its debentures. Now that means, see, the first one is already going on to 55 people to issue equity shares. Okay, so the allotment is not yet done for them. Before the allotment is done for them, the company also issues another private placement offer letter to 155 persons differently in their individual name for issuing its debentures. So in the first case it was equity shares, second case it is debentures. Please note, being a public company, now the question, can it issue securities in a private placement? First question. Second, is it in compliance with the provisions relating to private placement, or should these offers be treated as public offers? What if the offers for debentures is given after allotment of equity shares but within the same financial year? So these are the 3 questions that we need to address. Let's look at the answer. According to section 42 of the Companies Act 2013, any private or public limited company may make private placement through issued of a private placement offer letter. So the first question is answered. Whether it is a private limited company or a public limited company, they can raise capital through private placement. Okay, first question answered. Now, second question, is it in compliance with the provisions relating to private placement, or should these offers be treated as public offers? So now let's look at the second answer. The offer shall be made to persons not exceeding 50 or such high number as may be prescribed in a financial year. For counting the number of persons, qualified institutional buyers and employees under employee stock option scheme will not be considered. Here rules prescribe limit as 200 persons in a financial year, but this limit should be counted separately for each type of security. Like I told you, if there is one type of securities offer already going on, the same securities cannot be issued again in private placement until the first offer is either completed and the allotment is made, or it is withdrawn and cancelled. But a separate class of securities can be issued. That means the first private placement offer is for equity shares. The second private placement offer can be for debentures or preference shares, even though the first offer is still pending. Got it? So in this case, the limit given by the Act is 200. And secondly, the Act also says that a different class of securities can be issued while the first private placement is still pending. All right, so let's look at it. So if a company makes an invitation or offer to more than the prescribed number of persons, it shall be deemed to be an offer to the public and shall be governed by the provisions related to prospectus. Agree. So if the offer is made to more than 200 people at the same time, at a time, then it is considered as a public offer and governed by the provision relating to prospectus. Now let's look at what happens in our case. Also, a company cannot make a fresh offer under this section if allotments with respect to any offer made earlier have been completed, or that offer has been withdrawn or abandoned by the company. This rule is applicable even if the issue is of different kind of security. Okay, so let's look at it further. Any offer or invitation not in compliance with the provision of this section shall be treated as public offer, and all provisions shall apply accordingly. In the given case, ABC Limited is a public company, and looking at above provisions, we can say that even a public company can make a private placement. First question, answer. Okay, agreed. Company has given offer to 55 persons, out of which 4 are qualified institutional buyers. Hence, the offer is given to effectively 51 people. Why? Because while counting the number of 200 people, qualified institutional investors are excluded, and employees also who are getting employee stock option plans. So 55 minus 4, which is well within the limit of 200 persons. From this angle, the company is in compliance with private placement rules. So the first question is yes, a public limited company can raise capital through private placement. Agree. Then the second one is the number of people is 200 given by the Act, and they have issued equity shares to 55. Out of the 55 people, 4 of them are qualified institutional investors. So 55 minus 4 is 51. So the company is within the prescribed number. But the company has given another private placement offer which is non-compliance of provisions of section 42. Hence, the offers given by the company will be treated as public offer and shall be governed accordingly. So the rule says that if the equity share offer is going on, at that point you cannot make again a private placement offer of another security as long as the equity share offer is either abandoned or it is accepted. I think earlier by mistake I said the other way around. So when there is any offer of private placement still open, doesn't matter which class of security it is, subsequent private placement offer of any other kind of security cannot be made unless the first offer is either accepted and completed or it is abandoned. Okay, but if the company gives offer of debentures in the same financial year after allotment of equity shares is complete, then both the offers can be treated as private placement offers. Here we should not add 51 and 155 persons for checking the limit of 200, because the limit has to be checked. Because for every class of securities, the limit is 200 and not all put together. Okay. Now, with this, I finished the session on allotment, subscription and allotment of securities, prospectus and allotment of securities part 2. I request all of you to use the code Prathik, Prathik, while you make your subscription into the Unacademy Plus platform. The Unacademy Plus platform gives you 4 major advantages. Firstly, it gives you daily live sessions of the educator of your choice. You get to chat with your educator, engage in discussions, ask your doubts and answer polls. Yes, all this while the class is going on a real-time basis. You do not need to wait for appointments or other things with your educator. You can do it on real-time basis. The Plus platform of Unacademy provides live tests and quizzes which help you evaluate your preparation with regular mock tests and quizzes and get detailed analysis of your performance to identify your weak areas and your strong areas, so that you can spend more time on your weak areas and in turn make them one of your strong areas. The courses provided by the Plus platform of Unacademy are structured courses, because all the courses are structured in line with your exam syllabus to help you best prepare for it and to ensure to the maximum extent possible that all important aspects of your exam syllabus are completed when you complete the course provided by the Plus platform. And lastly and most importantly, it gives you unlimited access. That is, one subscription to the Unacademy Plus platform gives you access to all the live and recorded courses to watch from at the comfort of your house or comfort of your devices. And whether you're on the move, whether you're relaxing, whether you're in between meetings, you can view it whenever you want and take advantage of it. And 24/7 it is available to you. So I encourage you all and expect you all to request you all to become a part of the Plus platform of Unacademy as soon as possible and take advantage of the world of courses, resources and content that Unacademy has to offer to you. For the ones who have downloaded and are using the Unacademy learning app on your mobiles, Thank you so much. And for the ones who have not yet downloaded the Unacademy Learning app, I request you to download the Unacademy app as soon as possible and make the most of it. You need to register on it using your mobile number, to which an OTP is sent. Using that OTP, you can register on the Unacademy Learning app and carry the world of content, courses, and resources that Unacademy has to offer you in your pocket, and access it whenever you feel like, or whenever you need to. It could be either in between commute, in between meetings, or whatever, and you can make use of it. So again, thank you for the people who have downloaded it and are using it, and for the ones who have not yet downloaded it and are not using it yet, I request you to download it as soon as possible and make use of it. The Unacademy Plus platform provides the following packages for the CA Foundation and Intermediate subscription. The packages provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package costs you rupees 3,500. The 3 month package costs you rupees 8,750. The 6 month package costs you rupees 14,000. The 12 month package costs you rupees 17,500, and the 24 months package costs you rupees 21,000. While you are free to make the subscription of your choice, please do not forget to use the code Prathik, Prathik, to get a discount of 10% on the list price. So the after discount cost of the various packages provided for the CA Foundation and Intermediate subscription under the Plus platform of Unacademy are: the 1 month package will cost you rupees 3,150. The 3 month package will cost you rupees 7,875. The 6 month package will cost you rupees 12,600. The 12 month package will cost you rupees 15,750. The 24 months package will cost you rupees 18,900. So there you see that you get a discount of 10% when you use the code Prathik, Prathik, when you decide to make a subscription. I request all of you to make your subscription as soon as possible, and personally recommend you all to make the subscription for 12 months and 24 months for 2 reasons. Firstly, it is cost effective, the 12 month and 24 months packages, and secondly, it gives you a longer duration compared to the other parts. And another reason is, when you're preparing for the CA Foundation and Intermediate courses, which is quite difficult, you require a normal period of 1 year within which you need to appear for your foundation as well as your intermediate examination. And going for the 12 month and 24 months package here will give you that kind of economy and cost benefit as well. So I request and urge all of you to take advantage of it as soon as possible, and do not forget to use the code Prathik, Prathik, while choosing your subscription to get a discount of 10% on the list price. For the people who have not yet followed me on the Unacademy app, I request you to go to the Unacademy app, go to my profile Prathik Gupta, Prathik Gupta, and click on the follow button in order to get real-time notifications about my sessions, the timings and the topics of the same, so that you never miss it and are in time always for my sessions, because I would love to see you in my sessions day on day, time and time again. So I thank you all for your continued support, and I request your support in the future as well. Signing off, and I will be back soon with another interesting topic and session. Thank you.